Did the inflation data just end the Bitcoin bull run? We'll find out. All right, the video that I'm going to be reacting to today is from CNBC. Bitcoin retreats from $50,000 after hotter than expected inflation data. So, is the Bitcoin bull run over?
Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin falling below $50,000 after breaking through that key psychological level yesterday, at one point reaching its highest level in more than 2 years. As of noon Eastern, Bitcoin traded around $48,500 after hitting more than $50,300 at one point yesterday. That's the highest level since December 2021. A hotter than expected January inflation report really driving things today. That came out early this morning.
First of all, you know these numbers are a joke, right? The fucking government, these numbers are smoke and mirrors. Everything about it. I mean, these fools, have they been to the grocery store in the last decade? What about getting gas? I mean, it's been like crap the whole time, and these fools have been just covering it up. So, what do they expect? Joke, dude.
The benchmark 10-year U.S. Treasury yield higher and pressuring risk assets. Okay, let's talk about the top stories. Michael Saylor, MicroStrategy's co-founder and executive chairman, discussed Bitcoin's moves higher on CNBC's closing bell overtime yesterday, when the cryptocurrency was trading above $50,000.
Yeah, I hate this guy, right? Michael Saylor, oh my God, dude. Everything he says, I just want to grab him by the neck and be like, shut up! This fucking clown, dude.
10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
I mean, that's true, right? Obviously, there was pent-up energy. The ETFs were bringing, the normal folk into it. So this is good, and it is a longer play for sure. But I still hate that guy, dude. Oh, he drives me crazy.
Sentencing of Changpeng Zhao, also known as CZ, has been postponed until the end of April. That's according to a notice in Seattle federal court, which didn't explain what caused the 2-month delay. The former Binance CEO is a resident of the United Arab Emirates and has been ordered to stay in the U.S. after pleading guilty on November 21st to a charge of violating anti-money laundering rules. The prosecutors have reportedly considered asking for a harsher.
I mean, do y'all believe that? I don't know, man. With the way that the government is, you saw what they did to Ripple. I just don't know how much I believe in this story. Let me know down below. I mean, what do you think on it? I personally think the government sucks ass and they'll do anything to bring anybody down. CZ threatened them for sure, so they went after him. But again, I'm just not sure. I don't know.
All right, sticking with ETFs for our main story, CNBC's Bob Pisani is at the Exchange ETF conference in Miami Beach, and he sat down with Matt Hogan, the CIO of Bitwise Asset Management, along with Rick Edelman, founder of the Digital Assets Council of Financial Professionals. The two weighed in on how regulators and investment advisors are thinking about the new investment products.
We're here at the Exchange ETF conference. What's that? 2,200 financial professionals all trying to figure out where's the ETF business going. Yeah. Good news. Business is growing.
And you guys still don't know nothing. Okay? All you got up there is your little fancy suits, right? Your piece of papers and your license, and you think you know it, right? Inside information all over the place. That's the only thing that you guys know, right? God, come on. Let's get out there like you know a damn thing. No
$8 trillion in ETFs, assets under management.
Makes sense.
$7 trillion a year ago, keeps growing. We want to welcome all the viewers for CNBC's Crypto World. I have two big stars here, two old friends of mine who know a lot about this business. Matt Hogan, head of Bitwise Bitcoin ETF. He runs that, of course, with Bitwise as well. And Rick Edelman, head of the Digital Asset Council of Financial Professionals. First off, we want to know, the viewers want to know, there's 10 Bitcoin ETFs that are out there. Are they tracking right? We all want to know, is this tracking Bitcoin properly? It's been 5 weeks now. What's What's the story?
All of them are tracking properly. All of them are giving investors peace of mind. They're the simplest and most secure way most investors
better be tracking properly, right?
Fees are incredibly low.
No,
it's been
they're not tracking properly.
Crypto, Bob, but it's also been a huge win for the ETF industry. These have done a great job.
It's been amazing watching the price wars that happened literally over the weekend. I actually had to do stories like on my Trader Talk where, okay, here's the new pricing. And between the time I had the story out in the morning and wrote it the night before, the prices had changed. I got emails saying, Bob, we changed the price. It's not 19, it's 16 now. Basis points.
So
you're all crooks.
Cost is not an issue here.
You're
what
all
are you charging
crooks,
right now?
We're charging just 20 basis points. So that's, to put that in perspective, that's half the fee of the largest gold ETF. It's an extraordinarily low fee, and it's waived.
Price was supposed to go to the moon, right?
I think Grayscale had 26 billion. I think they're down to 20 billion. So there's been 6 billion in outflows, which makes some sense going into the other ones that are out there. But are you attracting more money independent of that? Are there other people investing?
Net inflows at this point of pushing $3 billion.
Yeah, and I just build on that. I actually think it's bigger than that $3 billion, because some of the money that came out of the Grayscale product was the FTX bankruptcy. It was hedge funds that were playing a premium arb. If you're thinking about how much new investors are coming into this market, I think
I hope the price
closer to 5
goes to the moon
billion.
soon, right?
We've
been waiting forever. These Bitcoin ETFs.
It's a huge success.
And this
is supposed to be our salvation.
What is going to propel? That's a big.
That would be nice. 150 billion. Is that what he said? That would be huge.
A big number. What's going to propel that?
It really isn't all that big when you do the simple arithmetic. Individual investment advisors, independents, those that are operating their own firms, collectively manage around $8 trillion in assets, and 3/4 of them in every industry survey done by DAC-FP as well as by Bitwise all show that 3/4 of advisors say that they're going to allocate to these ETFs.
First of all, we know that these advisors don't know anything. Look, I was an advisor for 25 years, a little piece of paper. I didn't know nothing. Yeah, I went until I started learning how to trade the market. That's when I started knowing, but don't kid yourself. These advisors know nothing. All they do is pass a test, have a piece of paper, and they tell you they know what the hell they're doing. Trust me on this. When they start approaching you, they don't know anything. All they know how to do is take your money, go give it to somebody else, and that other person manages your money, and they act like they know what they're doing. So don't let those fools fool you. Advisors. Like these guys, what do they know really? All they know is inside information.
Be about 2.5% of assets. Do the arithmetic. $8 trillion times 77% times 2.5% is $150 billion worth of flows. And that's just independent advisors. It excludes the wirehouses. It excludes the regional broker-dealers. It excludes the institutional investors.
But what's driving people into it? I mean, look, we know people watch Bitcoin primarily because the volatility, and a lot of it's just hope to make some money very, very fast here. You have a very aggressive price on Bitcoin.
You nailed it, brother. All we hope is to make some money real fast. You nailed it. Hey, give that guy a golden star, baby, because you hit it right on the head. We don't give a shit about any of that. All we care about is making some money. So is this ETF going to make us some money or what? That's all we care about.
All of those tens of billions of dollars of inflows, it's a supply-demand issue. Classic. So clearly, as the increased demand occurs in a limited supply environment, it can only
supply and demand. I think
rapidly.
My 5-6-year-old daughter would have known that.
I would just add that the people who are buying Bitcoin now in an ETF, the financial advisors that Rick is talking about, they're making allocations for the long term. Financial advisors, as you know, are not short-term traders. They're not.
First of all, financial advisors aren't any traders. I was a financial advisor. You go to somebody, you convince them to give you money, and then you mail it off to the company, and somebody else manages it. Financial advisors, they don't manage shit, dude. They don't even know what they're doing. 99.99% of them. And I know because I was one of those fools.
Bitcoin will be next week. They're making an allocation that they plan to hold for a year, 3 years, 5 years, 10 years, that they plan to rebalance like they would stocks and bonds.
Who is buying
know what you hold,
Bitcoin ETFs right now? I mean, you seem to be assuming it's
we're seeing a lot. I mean, I can talk at Bitwise. We're seeing a lot of flows from RIAs. We're seeing flows from family offices. And of course, we're seeing some flows from people rotating out of high fee products into our products. But I think the natural market, the big unlock for Bitcoin ETFs is the financial advisor market. First, RIAs who are independent, and then wirehouses.
That's true. Even though they don't know what they're doing, which they don't. They're salespeople, right? They're glorified salespeople. Kind of like a lot of these people out here on YouTube, right? They're just selling you the narrative that you know what you hold, and boom. But that is important because those fools are going to be out there pushing it. We know it. But at the end of the day, we just want the price to go up. We're tired of XRP getting stuck around 50 cents, and that's it. That's it.
This is only going to expand as they grow more comfortable with the product, as asset flows are there, as they become more comfortable with the trading spreads and the accuracy to Bitcoin's price, and as they continue to see client demand. I mean, if they're in the business of collecting assets under management, and if they've got a big pool of investors who want to buy the product,
they're in the business of just making money, like everybody else.
I talk to RIAs here.
Nothing wrong with that.
I
but
hear
let's
some of them say, "Okay, this is the first real product." A spot Bitcoin ETF that's a true bridge between crypto and the professional financial community. So there's the plus. But then I hear guys saying, Bob, I'm not sure how I can legally recommend this. You know, Gary Gensler took a shot.
Did he just say they don't know how they can legally recommend it? First of all, it's illegal. Okay. So selling Bitcoin and buying Bitcoin is not illegal. And Gary Gensler, don't get me started on that clown, right?
Those are legal terms, basically saying you guys buy Bitcoin for grandma, potentially the investment community, you could get sued by the legal community. How do you protect yourself? There's no standard.
These fools, these advisors, they're supposed to advise people correctly. I'm not going to give my 80-year-old grandma Bitcoin. If they don't know that, then they definitely don't deserve to be in the game. Because they suck.
And the amount of allocation to the portfolio, and you have the proper disclosures and disclaimers so that the client is making an informed decision, there is really nothing to fear any more than you would any other investment allocation.
So
exactly.
Digital asset
nothing to fear.
Professionals. This is essentially
it's called
job,
doing your
right?
job.
Are you doing seminars for RIAs about this is what you need to do to recommend
seminars?
Bitcoin for grandma?
These fools don't even know what they're doing. Right? These financial advisors have been bashing Bitcoin, bashing crypto for the longest time because they're not getting paid. And all of a sudden now you're going to hear them come out and they're going to say, you know, trust us. We know what we're doing. What do you really know, bro? You've been bashing it for so long. You're only promoting it now because you get paid. I mean, come on, let's be real.
And they don't have to worry about a regulator coming in asking difficult questions. It is relatively easy, and the new Bitcoin ETFs have made it easier than ever to safely, from a compliance perspective, allocate to this without worrying you're going to run amok or run off the rails.
That is true.
Regulatory intervention.
That is
Are you confident that we'll have some path that makes this easy, that there'll be a legal standard that'll evolve here where RIA?
If not, I say we all find Gary Gensler and we punch the shit out of him.
Are going to be terrified they're going to get sued by the legal community.
Absolutely, as Rick mentioned, they're already educating themselves. They're already doing the work, and many of them are already allocating on behalf of clients. A lot of it comes down to right-sizing the portfolio allocation, making sure it's available to the proper set of clients. But you can absolutely do it. You're going to see it from the largest institutions to the smallest. They're going to find a way.
All right. So is the Bitcoin bull run coming to an end, right? Bitcoin retreats $50,000 after hotter than expected inflation data. Well, first of all, the inflation data is a joke. The government has been covering up the real story for years. Printing money, printing money, printing money. Our dollar is worth nothing. And as far as the inflation, they've made it this way. I bet those fools haven't even been to the grocery store in like a damn decade. They have no idea what it costs to buy bread, to buy beans, to feed a family. They're a joke. Okay, gas, I mean, don't even get me started on that crap. But one thing I do love about digital assets is they are deflationary. You can't print them to oblivion. It's just a matter of time before all of this, and I mean all of it, catches up on these fools, and it's going to be awful. But you and me, who are in the know with crypto, digital assets, we're going to be way ahead of them. So as far as it retreating and the bull run being over, Absolutely not. Absolutely not. It was a reaction based on a bunch of fools out there selling. So they started panic selling for whatever stupid reason. But this gives opportunity, and it's just a matter of time before we hit our support level and we bounce up. Are we going to go to the moon? I don't know. But one thing I do know for certain is every single person on Wall Street are a bunch of damn fools, and we need to get them out. All right, hey, don't forget to like and subscribe to the channel on your way out. If you're interested in trading the financial markets, check down below in the description. Hey, make sure you hit that little bell to be notified when I shoot a brand new ripple effect. And if you like that ripple effect, click right here. I promise you this, you're going to love that one.